Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and today we're talking about investments in blockchain, but very specifically around decentralized finance, financial services, and banking as well. This is one of the largest and now most focused on categories in the entire blockchain ecosystem, next to potentially NFTs. So we're going to talk a little bit about NFTs, I'm sure, at some point today. However, we're going to be very focused on decentralized finance. And we've brought some great investors from around the world to share with us their thoughts and perspective on what's happening throughout these spaces as well. And thank you so much for tuning in. If you're liking what you hear, make sure you click subscribe and share the episode, along with checking out our archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. And if you'd like to be on a show like today's, please reach out to the team and or myself. We'll find that right spot for you. Speaking of team, a big thank you to the LATOKEN team and to Maria and Hasmik for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. I want to go ahead and jump in and introduce today's guest. But before I do, one quick heads up. We've got a new feature. That's right. You have the abilities to drop comments into the comments box. And hello to everyone out there watching. Feel free to say hi and drop any comments. If we aren't able to ask those in real time, we're all available offline afterwards to continue the conversation. With that, Henry, welcome back to the show. A little intro and a little background.
Absolutely. Thank you for having me again, Kyle. Henry, I'm here. I have a firm, HHN Capital, that I use it for advisory work, mostly on fractional CFO and COO work in the startup space and SMBs. Also a venture partner on the investing side, looking for early stage fintech, blockchain, consumer, AI, enterprise, data-driven companies. Spend so much time in the fintech side. Thank you again. Great to be here today.
Wonderful. Thank you very much, Henry. And then also, Jerry, welcome joining us for the first time. A little introduction about yourself and a background of how you got into the space around finance, blockchain, and DeFi.
Yes, thanks for having me, Kyle. Actually, I was today on another episode from LATOKEN at 12 o'clock. So a short introduction. My name is Jerry Flores. I'm based in London. I am involved in fintech and finance, particularly with artificial blockchain and crypto and with startups. Recently, I just published my Amazon Kindle book on it's called The Financial Revolution, and it's Bitcoin, blockchain, and the democratization of wealth, which I guess we're going to cover here quite extensively. I'm also a founder and CEO of MoneyDrone, which is a multi-chain investment platform powered by blockchain, artificial intelligence, and predictive analytics. Yeah, that's about it from my side.
Wonderful. Yeah, welcome. Congratulations on the book launch, and definitely want to hear a little bit more about that. Last but not least, David, welcome back to the show as well. A little intro, a little background for everybody.
Absolutely. Contrast to my esteemed colleagues on the panel, my existence in the space is pretty simple. I'm co-founder and I manage a crypto asset fund, which is multi-strategy. It's a hedge fund. And we invest in tokens on a long basis. In addition, we have a systematic trading portion of the portfolio that trades many different tokens. Then we have a portion of the portfolio that is long and short equities and fixed income of crypto-related companies, payment processing companies, so forth. And a minority portion of the fund is focused on the VC-style investing. Myself, I have about 12 years of investment management experience independently. I worked at a large investment bank trading distressed debt for a while, and then prior to that, I was an attorney. I'd say with respect to the fund, just one point that is, pervasive throughout is we look to capture value in the space of crypto assets and blockchain, being agnostic as to the form of the investment, whether it be tokens, equity or debt of companies, or early stage situations.
So with that being said, thank you, David and Jerry, Henry. Welcome, all three of you. I mean, let's jump right into today's topic. I mean, what's happening? Where are the investments being made around DeFi? as it stands. We recently reached all-time highs around just under $42 billion in TLV, according to DeFi Pulse. Today, we're resting just around $39.5 billion. There's a lot of money at work here. There's a lot more money seeming to go into these projects, into these protocols, and into networks themselves. But where are the investments from each of your view going into these spaces? David, let's kick it off with you.
Sure. So I think we break it down into three different parts in terms of growth of the sector. The first is adoption. The second is regulatory issues, and then the third is security. And I think the first probably grabs the most headlines, certainly in terms of how much money is being poured into your point and how much money there is to be made. The second piece of regulatory, there's certainly a lot of lobbying that's probably going to go on, and we see already in the current administration in this country, there's a bit of a divide already that we see between Janet Yellen and Gensler, and I think that I don't think there's a way to invest in that, although it needs to be looked at in terms of systemic risk to the entire asset class potentially, although I think the asset class has evolved far beyond the ability of regulators to pull the whole thing back. And then finally, the security portion, which probably gets the least amount of focus because it's not as sexy, but certainly there is a fair amount of money to be made there and certainly growth, but I don't think it'll ever attract as much attention as the adoption and the innovation that goes on in the sector vis-a-vis practical usage of DeFi.
Do you think that that's maybe because it's kind of similar to enterprise, or the way enterprise has been looked at in many other industries, where it's just not very fun and exciting for most people? A lot of people want to build for the consumer, but instead the enterprise actually has huge opportunities and huge scalability along with revenues. But again, it's a little bit different of a battle. Do you see that maybe potentially the reason why securities and regulation may be a little bit not as focused on right now?
Yeah, I think that's right, Kyle. I think the other thing to go ahead and kind of focus on is there's probably not as much upside because there can't be as much explosive growth. Certainly, it'll have to keep pace with the industry, but in terms of just sheer numbers, in terms of users, in terms of dollar activity, and so forth, there's probably a limited amount of that, in the security and regulatory space, and certainly much more on the front end.
That's a good point. Henry, I would like to come to you next on this. Anything to add to David's point? Thank you, David. And also, what are you seeing around decentralized finance and financial services from an investment standpoint that seems to be a current trend right now?
Absolutely. Maybe I'll take a little bit different angle to answer the question. I think David did an awesome job in terms of summarizing it. For those who are a little bit new into DeFi, which is many of us, what is DeFi first? Essentially DeFi, it's finance. It's not relying on central finance intermediaries such as brokerage, exchange, and banks. Now, if you look at historically finance, we need a central intermediary, whether it's banks, brokerage houses, so on and so forth. So decentralized finance basically essentially rely on smart contracts and blockchain. The concept, it's great. It's very interesting. And also, people ask, why do we really need to rely on central intermediaries? Because, when we deal with money, the word trust, or the concept of trust, is extremely important. So you have these commercial banks, Chase, HSBC, Bank of America, and investment banks like Goldman Sachs, JP Morgan. They have built their reputation and trust for hundreds of years. Now, DeFi is actually very exciting because now I can just really cut out the middleman, which are the banks, the central intermediaries, and then transact. But it comes with a lot of risk. I think it's been getting more popular over time, but I think we do a lot of risk. And just maybe you talk about the growth, I think you gave a very high level number. I'm going to just share, I think late 2019, there was about close to a little bit more than $1 billion deposited into different decentralized finance protocols.
Yeah, it was May, just to give you the fact check, it was May. We crossed over $1 billion in May 2020. That's when we made the switch from under $1 billion to $1 billion. It was just around the mid or end of May.
Absolutely. And then late 2020, it reached close to 11 billion. And then in the beginning of this year, there was about $20 billion invested in DeFi. So the growth curve is coming up very, very quickly. It's very, very exciting, but it's certainly not without risks.
Yeah, I mean, what are some of the risks that you're seeing right now, Henry? I mean, this is a lot of money. We're talking 40 billion. We'll just round up for a minute. $40 billion. And as you mentioned, about a third or so of that has been in the last 2 months of here in just the beginning of 2021. We've seen almost that 40x since May of last year. What kind of risks are associated with this from your perspective as an investor?
Absolutely. So let's say if you deposit money or invest into a commercial banks, right? Like a big one, that your money, it's relatively safe. Why? Because, it's the regulations on these banks and commercial banks and investment banks. Now, once again, it's not without risk, but that the regulators are watching very closely, right? They have a tab on it. But when you're dealing with decentralized finance, a lot of times you don't even know what the other sides are, right? We have seen early on with Bitcoin, with some of these exchanges, Mongog and things like that, and only about 4 or 5 years ago, when it went under, you don't even know where the money went. So, wow, it's very exciting. There's a lot of money sloshing around, but it's not without risk, because sometimes the evasiveness of being DeFi is, you don't know who the other side is. They might be, let's say, build their reputation, but there's so much money on the line, people can disappear. So I'm certainly, I'm very favorable about DeFi, but I'm not naive in the sense that it's not without risk. And I always say buy beware.
Thank you, Henry. And just a reminder to all speakers, if you can go on mute when you're not speaking, there's a little bit of background noise, so appreciate it. Thank you. Jerry, before you mute, I do want to come to you next around decentralized finance. I mean, it sounds like you're playing in a very unique position in this space, working with fintech, blockchain companies. You've also done a lot of research, writing a book, and also doing a little bit with predictive models. So paint us your picture of what you're seeing happening in decentralized finance, or DeFi, and financial services in general. This revolution that you've written about, what does that look like today as it stands as an investor?
I fully agree with what has been said just now. I mean, the trust factor and the regulatory is absolutely crucial, because finance has been around for so many years now. So all these financial instruments, securities and all that, they had a trajectory till they got made into law and everything became standardized, and you have the financial markets, and there is a certain trust that has been built up all these years, that parties can trade with each other knowing pretty much that they're in safe hands. DeFi has the challenge that it's new. And like, you trade peer-to-peer with somebody that you might never have known or seen before, and they might not even have the reputation. So I think the trust factor is something that needs to be worked on, and that will also improve with regulation. Now, where I'm based in London, the FCA is not too crazy about crypto. So they're not doing all the steps necessary as compared to, let's say, Switzerland, where you have Crypto Valley, where the government is supporting, where FINMA, the Financial Authority of Switzerland, is supporting blockchain, crypto. It's supporting DeFi, and it's doing that by passing at least guidelines. They're not laws yet, and they're also approving certain banks to be able to engage in trading of digital assets and securities. Going back to London, where I'm based, we are now just out of Brexit. We just left the EU, and we had pretty much of a sour deal when it comes to the EU-UK trade deal. 6 billion pounds daily of trading has moved to the EU. So that's a big loss for London, which is a big finance and also one of the biggest fintech centers in the world. So right now they have done a report. It's called the Khalifa report, and they are saying that for the UK to get back up there as a financial center, it will need to do what they call the Big Bang in fintech. So they need to look at implementing laws and regulation, and the FCA, the Financial Conduct Authority, which is the equivalent of the SEC in the US, will need to look at crypto from a different angle and see to it that somehow it is back up there where it used to be. Because in the 4-year process that we were talking about leaving the European Union, there was a lot of back and forth, and a lot of things just got stuck in its tracks. They didn't proceed with it. So now that we finally officially left, we are now trying to get fintech back on track and to promote it within the UK. So I think in the near future, London will climb back up to being a major fintech hub. And at the same time, I believe that FCA will somehow have another look at crypto and everything that comes with it, and maybe digital securities and assets, and maybe there would be some kind of future trading in the UK. But again, I think the biggest hurdles is mainstream adoption of crypto, regulation, and the trust factor is quite a big aspect in all of this.
So speaking of that, and thank you, Jerry, as well, the trust factor, PayPal just now announced the purchase of Curve, a crypto custody firm, as well. So we know that PayPal entered the digital currency space as a whole towards the end of 2020 and opened up the ability for all of its users to begin buying cryptocurrencies, and now have moved even further aggressive here in 2021 around the space, not just with today's acquisition again of Curve, the custody solution, but also have seen opening up the network to all merchants, but then also bringing Venmo into the picture and otherwise. So today's acquisition that again just happened moments ago is a pretty big news for the DeFi space as well. So any thoughts as to where the world of custody may go as we've started to see these acquisitions? Anchorage also raised about $70 or $80 million earlier this week, one of the largest custody companies out there as well. Harsh, any thoughts on decentralized finance and custody, on how things may change as major players like PayPal and others have started entering the game in a more aggressive way, not including traditional banks as well? But I'll let you go from there.
Got it. So essentially, decentralized finance was supposed to be kind of like a revolution, which would kind of bypass the financial institutions, right? Where you could eliminate all the brokerages and kind of make it, kind of make it extremely cheap, especially cross-border currency transfer and other assets. But you had these, it started in 2016, 2017, and you had a lot of these failures where without these gatekeepers, in a way, the system kind of collapsed altogether, right? So that is, and you saw a lot of failures which caused, US in particular, India as well, banning ICOs altogether, and even banning a lot of crypto trading. So that is why, you cannot have completely DeFi altogether. You do need some people in the middle to kind of have some structure, some regulation in place. So Jerry and I were discussing in a panel earlier today as well, the same thing. Without having those specific, specific regulations, specific gatekeepers who bring in the element of trust, without that, it's extremely difficult to have a completely decentralized system, because then it would be completely chaos and it would be very hard to manage. So that's why in the DeFi space, you have these big banking institutions, PayPal coming in. It's actually a welcome sign, because it adds a level of credibility, it adds a level of trust, and something which people can really look at. Particularly if you look at it in terms of the financial services space, it also creates more facilities over there as well, right? So particularly in a country like India, where access to financial services is extremely limited, getting loans from the banks, the NBFC, etc. It's extremely complicated. So that's why we have these innovative fintech companies coming up with innovative products like for invoice discounting, for other getting invoice based revenues. Then for international shipping, you get loans for that as well in advance. So a lot of these innovative fintech products that are being seen right now have been kind of structured in the centralized banking system. If you can come up with something innovative, excuse me, if you can come up with introduce blockchain over there to kind of remove the centralization, as well as at the same time keep it decentralized in the way of the storing data is decentralized. At the same time, you have the structure of a conventional banking system, and the combination could be something very different, very innovative, because right now it is all into the conventional system, right? So it has its own drawbacks, own plus points, etc. However, we definitely see a lot of convergence happening between DeFi and financial services.
Agreed. And with that, David, I want to come back to you on this. I mean, this is a big acquisition. We've also seen BitGo, along with a few others, start to enter this space. And again, in terms of the round acquisitions, pardon me. What are your thoughts? This is breaking news. It literally came out 5 minutes ago as I read the headline. So PayPal, and Henry, I'll come to you next on this as well. I mean, PayPal putting up anywhere, the rumors between $200 and $300 up to $500 million for a custody solution means somewhat of an aggressive play. Any thoughts to add on that, David? David, apologies, you're muted on that.
I love it. I think this shows a feverish pace on getting out in front in this space. I don't think it's based on hope. Mm-hmm. I think it's based on reality. The reality is transactions are going to start and continue immediately. And I think that PayPal, Square, old line financial institutions are in this race. They get it. It's not like, forgive me to go to a totally different industry. It's not like electric vehicles that are autonomously driving, which are, I'd say, further out on the time spectrum than this is. This is going to happen right now. Mm-hmm. And therefore they want to make money and investments right now. I'd be scared to be short anything in this space. It's got to be a fraud. Otherwise I wouldn't be short anything. I'd be long. And I think the fact that PayPal and Square, that were, I'd say, just, somewhere between 5 and 10 years ago, just upstarts in this kind of small time payment space, are now, really gunning for the biggest prize. And I think more and more gigantic financial institutions, whether they be banks, whether they be payment processing companies, or whether they be other upstarts that have massive amounts of capital from something like a SPAC, mm-hmm. are going to go ahead and chase these opportunities. And it's really great for people that are invested in the industry all around.
Well, and speaking of that, Goldman Sachs also announced they are dipping their toes back in to the cryptocurrency space and will begin trading. But custody is one area that they were looking to dabble back into. However, today's news may make that a more aggressive pace. Henry, thoughts on the PayPal Goldman news as well?
Yeah, so I'll probably once again use a different angle to answer this question. So let's put history into perspective first, then we'll then fast forward. If we look at the criminals of the 19th century and the 20th century, just sort of picture, they put on a hood, a mask, they carry a knife and a gun, they go to the banks, right? Kind of dumb, right? I mean, but that's how it works in the past. The criminals in the 21st centuries are very unique and different. They probably don't need to wear a mask. They probably don't need to wear a hood. They probably don't need to carry a gun nor a knife. What do? They are sophisticated hackers, right? After things are stolen from the custody or whichever, whoever's holding the assets, cyber-wise. There are a lot of times you don't even know who they are. It's very, very scary from that standpoint. Custody is probably by far one of the most important areas. We have seen the last 5 years, a few years, that these digital assets have been stolen and we don't even know who they are. I suspect, unfortunately, I hope I'm wrong, that we'll continue to see these kind of things. So if you look at how the US military system or some of the Fortune 500s were being hacked, a lot of the data, things or assets or patents or intangible assets were stolen. I think that's why we're seeing a lot of activities on these custody. Custody is extremely important, but certainly without risk. So I think, once again, I think it's a very interesting space. The assets have to store somewhere. But once again, I think a lot more sophistication developments have to be made. Otherwise, we're going to see a lot of these cyber criminals making headways. And then, I hate to say it, but it sounds like it's a lot with cyber criminals than criminals of the 19th and 20th century.
Well, just as a reset for our audience too, on that point is, decentralized finance, so DeFi, this next wave of financial technology has come at a very quick pace. The financial technologies that we have, or institutions, have had decades upon decades of learnings and lessons to have an improved infrastructure from a technology standpoint, which makes people feel safe that what they have stored there is taken care of. With decentralized finance, this is the beginning. We are in the earliest stages as to what this can be in the near future, whether it replaces the financial system, to Harsh's earlier point, or it runs in parallel and helps advance the current financial systems as well. So just for the audience, please do know that, do your own research and make sure that you do really take a look at these protocols that you're looking to get involved with as well. But Henry, back to you. PayPal makes this acquisition today. We've got Visa and MasterCard sitting on the edge, making acquisitions left and right. Amex has only made one or maybe two real investments they've been public about. Goldman breaks this news as well. Who's next? Who do you see as a major institutional player today that's been established for 10, 20, 50 years, 100 years, that may enter this space that has not yet?
Yeah, so I'm probably not going to be smart enough to guess who it is, but this is what I'm seeing. I'm seeing what I call maybe a little bit of vertical integration. I think the last few years we've seen players just focusing on what they do best. But now they're figuring out, what, maybe the vertical integration makes sense, right? We need to own the whole process of the transactions. So, let's say if you want to speculate, companies that are established, financial services company or financial companies that are established that have a custody, that might be, a way to play on a speculative basis.
Sure, it's just a prediction. Just to clarify, the question is just a prediction.
Yeah, honestly, I really don't know. But I think if I were, whoever it is, I would just probably look into companies who doesn't really have a custody. I think that might be sort of the ways to easily look at it. I'm not very good at making these kind of predictions, but thank you for checking me on that, though.
Sure, and Jesse, David, go for it. I think it's going to be a technology company, by the way. I don't think it'll be finance, but go ahead.
I think it's going to be JP Morgan Chase, Bank of America, Wells Fargo.
I think B of A. JPM already has everything at their disposal. So I think you're spot on. Mine of those is B of A, Bank of America. I think that's the one that's played least, because Wells Fargo, just for the audience, Wells Fargo also has a blockchain unit and has done blockchain development as well. So David may be spot on with that, but I'm gonna throw. All right, I'm gonna throw B of A in for my pick. Jesse, to you, or Jerry, pardon me, to you, thoughts on maybe who may be next in this custody space?
Yeah, maybe I'll just jump right in before I let Mike jump in. I think just if you can, I think you're very good at these kind of stuff. Just monitor your news. Maybe the news will come out for B of A's news before this talk show is over. So stay on the lookout, and then maybe we'll declare David as the winner. So.
I love it. I love it. Thank you, Henry. I will. The eyes are out. I'm looking at you, Bank of America. Um, with that, Jerry, with thoughts on maybe who dives next into this custody space?
I think all of them, they're going to go into it before year's end. I think everybody's going to go into custody because, like Henry says, the fraud and the crypto hacking that's going on, the stealing of crypto is a big issue. But apart from that, is also for institutionals. You don't want to be dependent on somebody that has the key written on a piece of paper that might get lost. So you want to have some kind of secure custody where you have multi-sig sign in, and then if something goes wrong, there is somebody else that can access the crypto. And so I think custody is going to be a very big thing now. And the reason why they want to do that, the big financial institutions already are having the trust factor, and now all they need is a security factor. So they need to protect themselves from cybersecurity, and they also need to be able to secure the amounts that are being deposited, because now with Bitcoin going through the roof, last thing you need is some major exchange being hacked and crypto being stolen. So I think now all the big companies, and like you would say, also not only just the finance companies. I think the next one that might jump in there might be even as crazy as an Apple or Facebook or Amazon or even Google that goes into custody. I mean, Amazon sounds a little bit far-fetched, but they have AWS cloud storage. Might be a little extra side income for Bezos.
Well, and they also launched a digital currency in Latin America, in Mexico.
Yeah.
Last month, they announced a digital currency that they're putting together for the country of Mexico. So you might be right on that one, Jerry. You might be right.
I think all the tech companies are going to get into payments and crypto one way or another, and they're going to have systems set up because they got already the subscriber base. I mean, Facebook. I mean,
Sure.
The Libra coin, which is now being renamed Diem. I mean, for them, if they could get on the good side with regulators across the world, it would work, but they have had a lot of backlash. But just imagine 2.7 billion, if you would only take 10% out of that and they start using the Libra coin or the Diem coin, what it would mean. I mean, it could become a reserve currency on its own. And then you have Google. Google is also a big player in the market. You have Facebook. I mean, those are big tech companies. I think all of them just about are going to get into crypto one form or another, or they're going to have custody or a combination of both. Because what people have a problem with, unless you know about blockchain a little bit and crypto and addresses, a lot of people just don't know how it works. I mean, they know there is crypto wallets and they can use it, but people want simplicity. And that's one of the reasons why I think Coinbase is doing so good, because you can get on the platform and start trading crypto, and your crypto is relatively safe. And now the big legacy banks are getting into that because they want to offer it to their customers. Of course, they're not going to deal with the small retail customers. They're going to deal with the big institutionals and also with the big investors that are already parked with them. So they're just going to add crypto and digital assets and securities to the offerings that they have already. So big, I think custody is going to be really, really big also in the coming months. I really believe that. I think Henry's 100% spot on that one.
Yeah, I mean, we've talked a little bit about the automotive space on autonomous. There's definitely going to be a need on the automotive side as well, right? If the Ford, Toyotas, Hyundai, BMWs, who are all in this space, are implementing financial technologies into their vehicles, and again, digital currencies play a role in that, there also may be a need for custody solutions, either jointly or individually. So a lot by all means. Harsh, big prediction of opportunity. So if someone is looking to invest to begin their journey into the decentralized finance space, what are a few areas that you would recommend they begin researching and looking at? Again, audience, do your own research as we get into this area of opportunities. It's very, very important. But Harsh, take us off.
So, firstly, I would like to continue on the point which Jerry was mentioning, right? Essentially, you have two options with you. You have tech companies doing finance and finance companies doing tech. So, over the last 30 years, we've had plenty of evidence to see that finance companies are very poor with tech, right? The kind of security gaps that we've been seeing, their data being hacked and all the details, with those leakages happening. Clearly, the existing finance companies are struggling with the tech side, right? So I definitely see the future is going to be towards a tech company who can do finance rather than a finance company doing tech, because cyber security is going to be at the essence of it. In fact, I was discussing with Raghu yesterday on the same thing, and he was telling me about an interesting cyber security solution that he's been working on. And something along those lines, we have to get really out of the box. And my personal experience working with Paytm, one of the largest fintech companies in India, these banks tend to be very legacy and very hierarchical in their thought process, and they underestimate the power of technology and the security aspects of it, which is related to that. So that's why I believe it's going to be a technology company with access to finance is going to really be the winner in this space. As far as opportunity in DeFi is concerned, I definitely, as to my point earlier as well, right, the convergence of DeFi and financial services, that is where I see true progress happening. Our true future is going to be in that direction, where we see financial services completely decentralized, where you don't have to kind of worry about centralized opportunities. I know it's a little out there, completely out of it's not a conventional way of thinking, but that is what I feel, because financial services right now is extremely hierarchical, extremely rigid. Yes, you added some technological elements to it, but at the same time, it is still extremely very traditional way, right? You combine these two, and then you have like a magic pill for the next level. So I believe something along those lines could be the real future.
Thank you, Harsh. Henry, to you, areas of opportunity, whether that be DeFi, again, decentralized finance, or financial services, even into banking. Where do you see opportunities for building and investing for those that are listening?
Sure. I think one of the areas, I mean, obviously there are many, it's really exciting to be in finance or DeFi or fintech. Now, there are just a lot of opportunities, but I think the very interesting one is, I think I mentioned during our previous calls is, I'll make the same observation here since some of the audience might not be the same. So historically, we have what I call the last 5 to 10 years, what I call industry plus tech, right? What I mean by that is you have ed tech, education plus tech. You have prop tech, which is real estate plus tech. You have healthcare tech, or healthcare plus tech. And then obviously we here talking about fintech, which is finance plus technology. So you have this flavor called industry plus tech. What I've been seeing the last couple of years, this is what I call industry plus fintech. You have an industry that want to have some type of fintech element to it. Let's look at Apple, for example. Apple has historically been what I call a consumer electronics. Obviously, they get into a media business, which is called Apple News. And then obviously the interesting one, partnership with Goldman Sachs, is called Apple Pay. So they're getting into a fintech payment. So going back to the point of what Harsh was making, financial companies are getting to a technology company getting to finance. These companies by industry, the lines are getting blur and blur now. Now, in answering your question, so I'm making a prediction, the industry plus fintech will be the play for the next few years. That's the prediction I will make. And in answering your question, what's the interesting area? When these companies, historically, what I call just industry, right? Industry, whether it's healthcare, prop tech, whatever, they want to add a fintech component to it for like some type of payment. So why, if you look at a company like Stripe building APIs, these are basically products for companies that can have a fintech component to it or embedded finance. I would bet some of those plays would be very, very interesting going forward.
Thank you very much. Jerry, same question to you. Where do you see the areas of opportunity looking at the future? Again, you've written a great book around this, painting that picture of the revolution that we're entering in. Where are you seeing opportunities for those looking to build and or invest around DeFi and fintech as a whole?
Well, I couldn't agree more with what the panelists are saying, and Henry, whatever he's saying is just spot on. So I sent you a LinkedIn request, so please let's connect because you're really fascinating, really interesting. I think what is going to happen now, which is going to become really big, is tokenization. And the reason for that is because crypto now is going to the moon. It's a hot topic, a buzzword. Everybody's just jumping in head first. I think Bitcoin is something for people that have the money to be able to get involved with that. I think a lot of people are going to get burned. I mean, if you have double-digit swings up and down, we go up to 58. Yesterday was 44. Now we're back up to 48, 49. Even as we talk now, it could be 50, it could be 48. It goes up by the thousands. So I see a lot of people getting into it. I think you should only touch crypto and crypto trading if you know what you're doing. If you don't know what you're doing, don't get involved. That's my opinion. But okay, people always follow trends, always want to get involved, want to make a quick buck. But tokenization, I think, is going to be big because it's going to open up a lot of opportunities for retail investors. It's going to lower the entry bar for smaller investors to get on platforms and trade tokens of non-bankable assets, collectibles, music, movie rights, copyrights, you name it. And what I think is going to happen, and is already in the process of happening, and I was saying that in the earlier LATOKEN webinar that I was today at 12, the thing that is happening now is that central banks are issuing CBDCs. You see already Bahamas with the sand dollar, and you see the Chinese are already piloting CBDCs. And here comes the trust factor into play. The CBDCs are backed by a central bank, by a government. It's going to be pegged one-to-one to the national currency. So once CBDCs are issued, it's easy for somebody to use it because it's a bank that's standing behind it, it's a government standing behind it, the trust factor is there, and then the convenience is there. Whether you pay with a credit card or you tap with your phone or you're paying with US dollars or you're paying with crypto, it's not really going to make a difference because you know there is a government behind it. So once CBDCs go into action and you see different countries issuing their CBDCs, it's going to increase trust in the whole crypto industry. And with that, it will become mainstream. And once it becomes mainstream, you will see more people getting involved in digital assets and securities, all from the convenience of your little smartphone, because it will be made to such an extent that you won't have to go through a platform to be able to do that. And you will have the choice of going on a platform, although again, like Henry said, there is always going to be a central governing body. There's going to be a central, there's going to be somebody governing the platform. So DeFi, 100% peer-to-peer is, I think, still way off. But what I do believe is that within a short time frame of within this year, a lot of people are going to get into crypto and tokenized assets on blockchain because I think it just becomes easier to be done. There's hurdles to overcome, and we come back to the same point. Regulation is really, I think, the missing link in all of this. You need to have regulation, the trust factor, and the cybersecurity, and also the custody, so that you know that your assets are in safe hands, and you also know that when you trade digital assets and securities, there is some jurisdiction, some law that is governing that, and that will make all the difference in the world.
Thank you, Jerry. David, last thoughts as to areas of opportunity in DeFi and fintech.
Okay, so since I run a fund, I have to give a disclaimer that we are long both PayPal and Square, and I will advocate for both. On a risk-adjusted basis, I think those two companies, certainly for the average investor, are a very good way to invest in the space. In terms of the upside, certainly they're attacking the payment space, really hard. They certainly have momentum. They certainly have a forward-thinking mindset. They don't have a lot of legacy or old school plumbing or old school thought to go ahead and hold on to. Their entire, business platform is about innovation. In addition, their investment in Bitcoin gives the investor exposure to Bitcoin as well. And then on the downside, in terms of risk management, both companies have active user bases for their original services that were offered. So I think really on a risk-adjusted basis, I really think both of those companies are really good investments for, I'd say just an average person who can't be in front of a screen all day long on top of, every bit of news all the time, simply because this is such a fast-moving space. I think that there is good reason to be invested in both those companies right now.
Great
I like
points.
it.
And go ahead, Henry.
Oh no, I don't have a specific comment. I can't agree with David more. I mean, if you're just just a consumer, a retail investor, you don't have the time and bandwidth. You don't have access to these private deals. You can't bet against some of these bigger players. The thing is, I think we might continue to see a trend. The big is gonna get bigger. I think we've seen some of these companies play out, whether it's Facebook, whether it's Amazon, whether it's PayPal, whether it's Square. But beware, if companies fall behind, they may not be around in a few years out, because just the fact that technology moves so fast. But I think once again, if you believe in a management team, which is extremely important, and then what the companies are doing, you can't bet against some of these bigger.
Absolutely. And Henry, close us out. Any closing thoughts that you have remaining, and then also where can everyone find you online?
Absolutely. So I think, for those who are in fintech, DeFi, or particularly in fintech, it's a very exciting time to be in fintech. Obviously, there are many sub-verticals. I think it's good to learn all these sub-verticals. Henry on here, I can be found on LinkedIn. Henry on NGAN. My email is henry.h, my last name, NGAN @gmail.com. Thanks again for having me. Thank you, my colleagues here. I learned a lot from you guys. Thank you so much.
Thank you, Henry. Harsh, closing thoughts. Where can everyone find you?
Excuse me. So as always, glad to be back. Glad to have you, Kyle, and some amazing panelists over here for today's session. So definitely, as Henry pointed out, fintech is definitely a booming sector, and you take regular fintech and you add crypto to it, and the possibilities are literally endless, right? So definitely an interesting opportunity and space to be in. So if anyone wants to kind of reach out to me, you can reach out to me on Facebook or LinkedIn. And if you're an early stage startup founder, feel free to join my Facebook group called Startup Hackers, where I post a lot of content for early stage startup founders to get their mojo going.
Wonderful. Thank you, Harsh. Jerry, any closing thoughts? Where can everyone find you and your book online?
Okay. The best way to reach me is through LinkedIn. Send a message, send a request. Just write, a request message so I know what it's related, and then I'll most likely accept. And then LinkedIn is the best place. My name is Jerry, Jerry, and then the last name, it's Greek. It's FLO and then ROS, not ES, because that's Spanish. I'm Greek, so it's FLOROS. And you can also read my blog, and that's jerryflores.com. So in one go. You'll see there all the connections to Substack and Medium, and all the articles that are published on the subject matter. And if you like to read on decentralized tokenization, artificial intelligence, blockchain, and crypto in a very straightforward, simple language, with a time travel from when crypto and tech got involved and how far we got so far, you can buy my book on Amazon Kindle. It's called The Financial Revolution, Bitcoin, Blockchain, and the Democratization of Wealth. It's a very interesting book. It's not academic. I try to keep it as simple as possible, so you don't have to be a tech expert to be able, or a fintech expert to be able to understand it. You can read about all the things that are going on in the space right now and where I think the future is going to. And I believe that tokenization, DeFi, and all of that will lead to a democratization of wealth, because it will lower the entry barrier for your average consumer investor to come and get involved in the space. A little disclaimer or a little warning. I always suggest to everybody, before you get into trading, because I learned about trading at the London Academy of Trading in 2014. Learn about trading and investing before you get involved. Don't go head first. I mean, dip your toes in. There's a lot of free information out there. Learn about it. There's YouTube. There is whatever you want, books, free books. Learn about it and then get involved. Don't just start buying Bitcoin and going crazy. That's my advice to anybody watching this program.
Thank you, Jerry. David, close us out. Last closing thoughts. Where can everyone find you and the fund online?
Sure, you can find me at david@prochaincap.com. That's david@prochaincap.com. I don't have any closing thoughts. I simply want to go ahead and thank the panel. Excellent substance. Always appreciate good thoughts. And Kyle, thank you for leading it.
Thank you, everyone. Really appreciate, again, the insights and time today.
For the time and for having us. Appreciate your moderation. Excellent.
Of course. Thank you. Great points all around today. And to your audience, thank you so much for tuning in. If you like what you heard, make sure you click subscribe, share the episode, and check out the archive on LATOKEN.com, along with being able to hear from today's investors and all investors of the VCTV family as we bring the best and the brightest from around the world to break down topics like today's here in blockchain, decentralized finance, and financial services, or fintech also as well. And if you'd like to be on a show like today's as an investor or as an entrepreneur, do reach out and we'll find that right spot for you. A big thank you to the LATOKEN team, to Maria and to Hasmik for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott on all social media networks, as well as all of our speakers today. And as mentioned, please do add context when you reach out, where you heard us, and also what you would like to continue the conversation about. With that, we'll be taking a short little break, and we'll be back here with more VCTV in just a few minutes. Take care, everyone. Have a great day. Bye.
Take care.
Bye-bye.
Bye.
Have a nice day. Take care.